First of all, shout out to our sponsors for providing food and drinks, Border Brewing Co. and City Barrel. And together, we're going to start our first session. To invite to the stage first is Taylor Clausen with Abstraction Capital. Awesome, welcome.
Thank you.
Excited
to be here.
No, for sure. In honor of Keystone and Kevin, he loves when you introduce yourself. So give yourself a chance to introduce yourself.
Yeah, so excited to be here. I'm Taylor Clausen. I run a small venture fund called Abstraction Capital that focuses on tools for developers. So dev tools, DevOps, cloud infrastructure, that sort of thing.
Awesome. Are you from the area of Kansas City?
Grew up here, Shawnee Mission East, K-State undergrad.
Oh, really?
Studied accounting. I would not recommend that to anyone in this room. Don't do that for a living, but yeah.
Awesome. And what was prior to Abstraction Capital? I know that one thing we love to hear is the stories. What was prior to Abstraction Capital, and did that involve any other cities other than Kansas City?
No, more or less been a lifer. So rewinding all the way to K-State, accounting, realized when I took my first tax class that I don't want to do that for a living. And I ended up just stumbling into an analyst role at a seed fund that was affiliated with state government. So like MTC in Missouri is kind of a comp for that. Kansas used to have one. They no longer have one. So an economic development program that wrote venture style checks for startups. I was there for 3 years and just immediately fell in love with startups. It was like,
when is this?
07 starting. And yeah, just talking to founders, like these people are so passionate about what they're doing, no matter what it is. And I realized like, oh, this is the part of the world that I want to be close to. Like, this is the fun part. They don't teach you about this at school. Did not love the government and political side of that job. I'm not wired for that. Left in 2010, joined a clean tech startup here in KC. This company made retrofittable LED products for outdoor lighting. We scaled that to a few million in sales. Don't do hardware. It's a really tough business model. The working capital dynamics of that business are very unfriendly. It was right after the global financial crisis. So credit didn't exist, and equity is not a good solution for financing inventory. We ended up selling it in 2012. Not a life-changing outcome, but a good experience. I knew I wanted to get back into venture, and I wanted to stay in Kansas City. Those Venn diagrams don't overlap extensively, but it's gotten way better over the past decade.
Well, it's actually a great segue, because one thing that I had prepared. I have a few questions that Kevin want to make sure I got to you. Is what got you interested in venture capital?
I think if I were smart enough to be a founder, that's probably what I would do, but I'm not smart enough for that. But I want to stay close to it. And so the idea of being able to work with compelling founders, like I cannot imagine a more fun job than that. Like everyone's passionate about what they do. They're trying to change the world. It's where you want to be.
Awesome. One question I like to ask everybody is, right now where you are in your position, what are some of the transferable traits that you're using today? I know you're a self-coder, right?
Yeah, that was, we're fast forwarding a little bit, but that was kind of what was the genesis of my fund. Is like, I'm investing out of a family office here for 7 years and some change. And when I joined, it was just like, oh, software is taking over my whole day. I want to focus on software. Well, shit, I don't know anything about software. Like I can look at a balance sheet, I can go through a deck, but like, I don't know anything about what goes on under the hood. And so I started teaching myself how to code. And over the years, that went from like tinkering nights and weekends to building small side projects to eventually helping portfolio companies. And it was just this drumbeat in my head of like, I want to be doing these kind of deals.
Awesome. And do you still have to spend time refining those skills, or as everything progresses and things move forward?
It changes quickly. I try to carve out at least like a few weeks a year where I learn something new just to keep it a little bit fresh. But I mean, you'd never hire me as an engineer. I'm sloppy and incompetent. It's more like if you give me long enough, I'll hack it together.
Well, from talking beforehand, doing some research about yourself, very, very humble. You've had some great accomplishments. And first of all, what is what is abstraction? And do you know the meaning for the name? I have an idea of knowing the definition, but it's a very, very interesting name for a venture capital group.
It's, like there's always a joke, like one of the hardest parts about starting anything is figuring out what to call it, right? And for me, this one was a slam dunk. So in computer science, so like programming, an abstraction is something that takes something really complicated and reduces the surface area down to something really manageable. So it's kind of inside baseball for the founders that I talk to. Like they all immediately are like, oh, I love this. This is a great name. So that was the genesis of that.
And so the genesis, is that genesis in the part where you started your new fund?
Yeah. So I left that family office I was at the end of 2019, and I knew I wanted to start a fund, and I knew what thesis I wanted to focus on. It was like, software's taking over the world. There are not enough people who can write code for a living. Like, it's just, there's a supply demand mismatch. And I think software engineering talent is probably the most important resource any company has that doesn't appear on the balance sheet, right?
This part right here is so important because, so many times you hear, I failed, I went there and now I'm here, and so those in-between parts I think are so important for all of us to understand. What were some of the challenges with your abstract and getting it into going from 0 to 0.1?
Oh, well, we have some founders in the room, I know, and raising money is hard no matter who you are. And so I started my fund, I started fundraising. So like investors in a venture fund are called limited partners, LPs, right? And you have to sort of just like one by one get through those. And then there's different types, like just high net worths or angels, there's family offices, there's large institutions like pensions, endowments. For a fund my size, $13 million fund, big institutional investors won't touch it. It's just like, it would be like asking Goldman Sachs to write you a $10,000 check. They just don't do that for a living, right? And so just trying to slowly build that network and talk to people and get comfortable socializing the idea of what I was doing and why it needed to exist. It took a lot of reps. And then I started in January of 2020, and then in March of 2020, all of a sudden the world is ending because the pandemic hits and we're all locked in the house together, and nobody's investing in anything. So like everything just went to zero. Like everything I thought was going to happen just didn't happen. And so it was kind of like clawing my way back from that until December of that year. Like you have most venture funds, when they're raising money, they have multiple closes. So you kind of bring in like a batch of investors at once. And in my case, I was going to hold a first close, and I thought I had like ballpark half my fund ready to go. And I send out signature documents and half of it evaporated, man. And I'm just thinking in my head, like, what have I done? Like, this is a disaster. I can't live off the management fees of a fund that size. And so I just came to the conclusion, like, if I don't raise another dollar, I want to do this. I'll drive Uber at night. I'll do whatever. Like, this has to exist. So
why not? Why not give up? What was that? Was it knowing the impact you can make? Was it knowing that you helped people before? The internal, walking in your purpose. What was because even earlier, we heard crawling back, and this over time, a lot of times it gets overlooked, so what was it that you're holding on to get through that hard time?
I think there's a few things. Number one is like, I'm a one-man band. I don't have a partner. Like, there's not other people doing this alongside me, but I'm really fortunate to have a lot of like mentors and peers and friends in the space that I could call for a pep talk or just bounce ideas off of. Like, I wouldn't be here without those people. And then on top of that, it was also just one of those things where it was like, I know that this is the thing I want to build. Like, this is what I want to build. And even if I have to build it much smaller than I thought I would, I'll take that bet. Like, I think we can get there, and we'll find out. Like, I don't know yet still, but it's better than it was.
That leads me to, I remember when I was graduating college, I went to Avila University over there, and the president of the university, I was talking to him and his good friend, actually the leading donor of Avila. I was talking to these gentlemen, and it was picture time, and he didn't break eye contact with me. So we just kept talking and talking. And I'm like, I'm not going to look away. I'm not going to look away. And he asked me, he said, how does a fish get from pond to pond? Didn't say anything. He's like, it's an actual question. And basically he was saying that either someone has to get you there or it has to be a natural disaster. So he said, jump into the ocean, and if you survive, you'll become a big fish naturally. And so it kind of reminds me of that story there, and so that's something that's really, really motivated me from that day. And so that was 2020 is when Abstraction.
Yeah, first close in 2020, final close about a year later. Wow. So been around for a whopping 3 years now.
And how many startups and businesses are in the portfolio at the moment?
Yeah, so far I have 32 portfolio companies. I'll probably end up with about 40 out of this fund.
And you said you're a one-man band?
Yeah.
Okay, so I know especially the entrepreneurs in the room, they want to learn. What is your day-to-day? Your general day-to-day, of course, there's best versions, worst versions.
Yeah.
In between, what is your day-to-day looking like?
It's interesting. So, I mean, like, broadly speaking, and I would also identify, like, if you're a solo founder, if you're a solo GP at a venture fund, I think time management is one of the most difficult tasks that you have to face. So, like, the short answer is I don't know that I'm good at it, but I can describe it. So I think, like, broadly, my day-to-day falls in a few buckets. Number one is finding new companies to invest in, kind of sourcing deals, working with them, getting them through the pipeline, building conviction, due diligence, getting to the point where you invest. The second bucket would be working with companies that I've already invested in the portfolio. My check size is pretty small. Like, it gets up to about 400K. I don't lead most of the rounds I'm in. I don't take board seats as a rule. So I'm not like incredibly hands-on, but obviously like talking to founders is the best part of my day. So like I always tell my founders, like, I want to talk to you. I just may not, be able to help that much. So it's more like tactically getting involved when there is something they need help with in particular. Like, what do you think of this go-to-market strategy? We're trying to find this hire. We're getting ready to raise another round. Can we get ready for that? That sort of thing. And then, I spend probably a third of my week networking with other investors because I don't write lead checks. I'm not really sharp elbowed in rounds. So like I have to find investors who will invest alongside. So I talk to people who do deals in my space and we share deals back and forth. We find stuff to do. The unsexy part of the job is, working with fund administrators, bookkeepers, attorneys, and getting all the, legal compliance, tax, audit stuff done. And it has to be done. It's not the fun part.
With you said 32 at the moment. 32. What would you say? Because it's tough. Well, first of all, what are some examples of the fields they're in? SaaS, software as a service, or
it's a really narrow thesis. So like, kind of like if you were to characterize my thesis, I'm investing exclusively in engineers as founders. So like, I don't have a single portfolio company that doesn't have technical talent on the founding team. And they're building tools for people who write code for a living or in an adjacent role, like a technical PM, QA, business analyst, design, somebody like that. So that tends to take a few forms. One is what you're describing, like pure B2B SaaS, like something where it's a very top-down sales model. It's easy to understand, probably still implemented by a technical user. I have a lot of open source portfolio companies. So like their code is public, anyone can look at it and they build a commercial product alongside.
Do you mind explaining the difference?
Yeah. So, if you were to pick the average, what we'd call closed source company, someone who doesn't publish their code online, they're basically saying, this is our proprietary code. We sell you a commercial version of that. You get a license to it, right? Open source kind of flips that on its head. And open source has been around since like code existed, right? It was just not really a commercial product for a long time. And that basically says, hey, I'm building this thing in public. Anyone can download the code and run it. They can modify it. They can do whatever. And there's all sorts of legal licenses associated with that. But over the past, particularly like 25, 30 years, it's become very common for companies to do this as a way to build go-to-market motion. So it's actually, if you're an engineer and you want to use a product, it's really easy to trust that product and get started using it if you can download the whole code base and implement it any way you want, right? Okay. So you build awareness that way, and then hopefully eventually you grow a commercial product alongside it.
Oh, for sure. Wow, thank you. And, you said that you said 30% probably networking.
Yeah.
One thing that we talk a lot in these walls, we talk in the inside here with the kind of people that we have here is, that fine line between competition and confirmation, and we like to say no competition, just confirmation, but sometimes that's not always true once money gets involved as well. So for yourself, how does that feel in Kansas City? And would you say there's more similar or people that are venture in terms of VCs?
Yeah. And I should also like caveat this with, I have yet to have a local portfolio company. So I have 0 in Kansas City, though there's been a few that came close, and I hope to have one very soon. In Kansas City, most of the funds here are like more generalist B2B or, regionally focused funds. They have a geographic focus to what they do. And I have the inverse. Like I have no geographic hard thesis. Did I lose mine? Okay, we're rolling. Sorry about that. And so this was actually one of the reasons I wanted to start this fund, is because if you were to say, okay, Taylor, give me a list of people who write checks into pre-seed and seed companies that have an exclusive focus on developer-facing technology, there are probably 5 on planet Earth. And honestly, man, like there should be 50. Like the space is really important, and I think it's underserved.
So if that's 5 on Earth, then what's the next closest one to here?
Seattle.
Okay.
Yeah, Seattle or SF. There's one in New York too, but yeah, there's just not there's not that many. And so part of that was like, I think this space is important enough that it needs more to support. And then how do I build relationships across that in order to kind of like share deals back and forth?
Wow. I think the journey, gets overlooked so much. And, recently we had with Mental Health Awareness Month ending, And as a one-man person, we had a therapist in here talking about, validation. And I just wanted to let you know, congratulations on your work. It's phenomenal stuff. Definitely happy to talk about it.
Validation is very important.
I do want to jump into dev tools. I'd rather you describe dev tools before we jump into it.
Yeah. Okay. So, I'm going to try not to get too technical and in the weeds here, but like if you think about the software,
this group here is pretty
good,
smart.
Good.
Yeah,
okay,
the group usually, and this is why people come back because they like that we're not talking blankets. We're getting really into it. Yeah.
So if you think about sort of how software is made and how it gets into production, there's like distinct points in time that go along with that. One is some engineer, he or she is writing on his or her laptop the initial, code in a product. And then once you have a team collaborating on that, then like you have to deal with version control and like where it's shared back and forth. And then eventually you get to the point where you want to test it. And that's like a whole new thing, right? And then you get to the point where you want to deploy it. And that's a whole new set of tools. And then once it's deployed and in production, there's like a whole new set of challenges where how do I make sure it's running efficiently, that I know what's going on with it at all times, that sort of thing.
And then the exit.
Yeah, well, then there's exits. Well, I'll let you know what those are like. I haven't had any of those yet. But so like all along that value chain, there's like different tools you would use. So like dev tools are very focused on the earliest part of that life cycle. And then there's this category called DevOps, which is more focused on like the middle part of the life cycle. And then there's stuff that like fits into the once it's in production part of the life cycle. But fundamentally, 25 years ago, if you wanted to build a piece of good software that was used by a lot of people, you might be able to do it with 1 to 3 engineers. You really can't do that anymore. Like the sort of surface area required to build, deploy, and maintain high quality software at scale has just ballooned. Like the complexity is practically infinite. So I invest in tools that kind of like make that more manageable. That's how I would characterize, what I do.
Right. And with management and technology, I think it's not, we don't hear that statement much, especially with AI and all these things happening. And so how is AI playing a role in your field in general?
Has this been in the news lately? Are people talking about this?
AI, it's something that's not really, no one talks about it at all.
Yeah. Oh my gosh. So this is an amazing question. And I have opinions that are just opinions. So like, I don't know. I'm not an expert in
the beauty is I think, we actually do have a Web3 analyst and consultant in the room. And the beauty is that if he doesn't open his laptop, he's no longer a Web3 consultant because it changed tomorrow.
That's it. Exactly. So as a technologist, like all of the recent developments with generative AI and LLMs are so fun to play with. Like if you haven't tinkered with it, you're depriving yourself. It's so cool. I have had a lot of questions from my investors, family members, friends, like, does this mean like the end of all knowledge workers? And like, I got to be honest, I am not an alarmist about this sort of thing. Like, I think that this is no different than any other like big shift in a technological paradigm in history, where the thing that matters is differentiation. It would suck to be a blacksmith shoeing horses in 1915 because, hey, cars are going to put you out of business. That doesn't mean you don't have a job. That means there's temporary displacement. So I do think we'll see temporary displacement. In the field I cover particularly, I think this will only increase the need for developers. Like the analogy I would use is if you cut down trees for a living and you've been using an axe and a saw, and now we give you a chainsaw, do you have a job still? Yeah, you just cut down a lot more trees, right? So if we can kind of like lower the floor in terms of what the barrier to entry is for software development, that's the moment of 1,000 flowers bloom. Like this is great for software. And then if on the other end, you can make it easier to implement really complicated technologies using AI, like that's another 1,000 flowers blooming. And then particularly like I invest, like the one way to characterize my thesis is that like software is the infinite gold rush, and I invest in picks and shovels, not software products, right? So like if AI is a gold rush, like picks and shovels, man. Yeah. So like, and then in my field particularly, like who do you think built the AI? Developers. So exactly. I'm in. and
who's going to improve them? Who's going to operate them? And that's exactly sure. I have a friend of mine who recently he was in a meeting. He's got a really great promotion. I don't know if I can talk about his position or not, but he was in a meeting, long story short, and they said, we love your presentation. Their team had like a 3-month project, but there's AI that does exactly that. And he said, oh, I know how to run that. And he said, oh, you do? He said, yeah. He left, learned it, came back tomorrow, and got a pay raise.
I love
just
it.
in that abstract. Do you mind me asking, is there any way you could share how AI is implemented with you?
With my particular fund or with my portfolio companies?
With your portfolio companies.
Yeah. So You know, one of the things I mentioned earlier is that like complicated technology has a steep learning curve, right? And that's true for developers. Even if you write code for a living, if you're learning a new part of the stack that's like really far down in the stack, like it can get really hairy. And I think almost every single portfolio company I have has implemented LLMs or some form of AI to make their products easier to use. So like I think it has tremendous potential to reduce friction in complicated to use products. That's good news across the board.
Yeah, for sure. And I think it's funny seeing, you know, social media go in a frenzy about stuff like deep fakes. And I'm like, you could have made that 20 years ago. Like, that's not even what we're really talking about when it comes to this. You know, I love being really engaging with the community, and I want to make sure that you guys are following along. Anybody have any questions for Taylor before we move into our next session of this? Yeah.
Appreciate the info today. Like I said, I mean, talking about, like I said, the underlying things that a lot of people, especially in AI, you know, being in the tech space as well, everybody always wants to talk about the development of AI, but don't want to cover the, like you said, the people side of things, where the developers, if, you know, a lot of people in businesses are coming out with these AI projects and the developers really aren't able to catch up per se. What do you think is going to be, especially in this exponential growth of AI and, you know, DeFi and all these other things, what do you think is going to be the learning curve, especially for education, for developers to be able to catch up with this exponential technological growth that we're expecting? Because it seems like a lot of people, it's going to be like a very small amount of people that, like you said, on understanding a deep stack will be, you know, very valuable, and they're probably going to become that new 1%, essentially, like, if you really know how to work that stuff. So what do you think is going to be the understanding, obviously some type of tech and education, but what do you think it would be suggestions in your side of things to be able to create that 1,000, you know, flowers blooming effect?
Amazing question. I don't know if I have a great answer to it. I think when I think about what AI could do, like, I mean, if you've ever tried to learn how to code, like, it's a really steep learning curve, and there's just a million points where something breaks. Like the first time I was trying to learn something, like I had enough, like I'd learned enough Python in my head that I was like, okay, I think I have something I want to build. I'm gonna do this. And then like the next 2 weeks were spent trying to configure my Python environment locally, and I was reduced to tears multiple times, right? So like it was just hard, and figuring out what question to ask so I knew how to fix it was really hard. I think that's what really AI could be very good at, is kind of just taking a set of problems or a set of intent and then helping guide us to the right answer. So when I think about software development in particular, like even if you're not in that 1% that you're describing, where you're like truly doing elite stuff that maybe, you know, 1 million people on the planet can do, I think the demand for people at all levels of expertise in that stack will continue to grow. And if we can use AI to make it easier to learn and easier to get started, like that's great. And there's already tools doing that today, and I think they'll just get better. Does that answer your question at all?
Yeah.
Okay. Yeah.
We have one more before we jump into this next segment.
Yeah, my question right here. So you mentioned essentially allowing more people to get involved in the development pipeline, for, you know, summarizing what you said. I guess my question is around the recruitment process, because I have found as a dev, a lot of times I go and I read hyper unrealistic expectations on what companies want. They don't say full stack. They mislabel the job. They say, we're looking for a UI UX designer, should be like competent in React JS, have some knowledge of 3JS, have a background in Java, and, you know, have some knowledge of C#. No, they say C# would be nice, right? And I'm like, okay, nothing you mentioned has anything to do with what you're asking for. Your expectations are totally unrealistic, and then you're asking for someone with 10 to 15 years experience in this.
Right.
That's dumb. Yeah. So how do you manage that part of the hiring process in the pipeline? Because I found a lot of times that pipeline gets clogged by those hyper unrealistic expectations on who you need to hire to achieve what you're trying to get done.
Woo. This is a curing cancer question.
All you, Taylor.
Yeah, I don't know that I have a great answer to this, other than I completely agree with you that it's a huge problem. And like when my portfolio companies are hiring, I sometimes have to talk them off the ledge a little bit when they're saying like, hey, I need someone with 15 years of, like embedded C development. And I'm like, great. Like, Apple and Garmin already hired all of them and you're going to have to pay them $500K a year. So I think there's, I think the optimistic case here, and I'm an optimist at heart, or I think I'd be bad at my job, is that people will maybe with, just things like AI and just more kind of institutional awareness of what goes on in software, people will get better at labeling what they're asking for. But I think what the problem you're describing is very intractable. And as a startup guy, I'm just going to kind of like, just push that on and say large companies are the absolute worst at that too. So yeah,
that's awesome. Thank you guys. Thank you. We'll have one more. We'll save 10 more minutes to the end for one more question there. Okay, perfect. So really quick to jump back into VC, how do you define venture capitalists? Like if you're like, hey, I'm a VC, what do you say? How do you define that? Other than the literal definition of venture and capital, it's pretty plain, but
it's an interesting question because I would say that definition has changed a ton over the past 50 years. So like if you look back at the history of venture capital, like when it was first getting started, Arthur Rock and Don Valentine and these people, like they were literally writing tiny checks into business plans for companies that had absolutely nothing in the works yet. Like it was the two guys in a garage type of thing. And then, over the past, X number of decades, venture capital can be used to describe T. Rowe Price writing $500 million checks into pre-IPO rounds. That bears no resemblance to what I do, right? And so when I think of venture, like I would say the soul of venture is early stage, like first check in. So whether you want to call that angel or, we have this new stratification where like 20 years ago, Series A was the first check into a company. And now we have pre-seed and seed and mango seed and avocado seed and Series A and B and C and D and pre-IPO, so like it has become a lot of different things.
Those are all real terms, right?
Those are all real. I did not make any of those up.
Oh, we gotta do some research after this.
Yeah, but frankly, a lot of that is just like how you want to label something. So like, I think today, your first institutional check is either going to be pre-seed or seed. Institutional meaning like it's an organized fund that has a mandate to invest in a basket of companies in a certain space or stage. And that to me is like the exciting part. Like I would be a terrible late stage investor. Like, wait, I have to do math. Like, no, I can't. Come on, I'm out. Yeah.
So, so now that when you analyze the field and you understood, what you do like, what you don't like, and having past experiences to get you into where you want to be, what was the decision to niche down? And then how did that reward you?
So I think I'm at my best. Like, for example, like when I'm talking to founders, there are a lot of investors, and this is not a right, wrong thing. There are a lot of investors who want to be walked through a pitch deck. I gotta be honest, Jonathan, I have no desire to be walked through a pitch deck. Send me your deck after, I can read. I want to have a conversation. Like I want you to tell me a story, right? And I think that's what I love about sort of the stage I invest is like, I'm like, maybe the company has some revenue, but not enough to do any real analysis on. Like it's all about the narrative. It's all about the vision. And I think startups are hard because frankly, like the average sixth grader can probably pick apart the business plan and say, well, this is how this company is going to fail. And statistically speaking, that sixth grader is right. The company will fail. But like if you're an early stage investor, the power of what you're doing is not asking what can go wrong. It's, well, what if this goes right? Like what's the magnitude of this? Because it could change the world. And that's fun to me. Like doing cohort analysis on a Series B company. Can I do it? Yeah. Is it fun? No.
Yeah, it's automatically just knowing that the impact is made, and from the other side of the I guess the spectrum, I guess is it's really amazing when someone believes in you, yes, and it's even more amazing when someone believes you and puts money towards it. So that empowerment. What would you say in terms of leadership traits? This is gonna be a tough one because everybody's different, introvert, extrovert. Yeah. But what would you say on maybe intrinsic motivation that you see common between people that you trust? And let me ask you a better question. How often do you invest in the rower versus the boat?
Almost 100% of the time. Now that's also like stage specific for me, right? Like there's not enough boat built when I'm investing. But in my case, like if you're in a startup and nothing is going wrong, you're probably not taking enough risks. So like shit's going to be breaking left and right. Like that's just how it goes. And so what I want to know is like, when I'm talking to a founder, does he or she have the ability to problem solve? Are they resourceful? If they're trying to attack a problem, what do they do? And like the best founders in my portfolio, if they're up against a problem they don't know how to solve, they schedule 25 phone calls over the next 2 days and talk to every person they think is smart. They synthesize those answers and build conviction about what they think is the right path for them. Like there's no substitute for that. Like if you can do that, it's a superpower.
Why assume?
Yeah, exactly.
Why assume?
And then on top of that, like I think I have a bias toward founders who are really good written communicators. Like in my space, if you're trying to build early awareness about what you're doing, things like blog posts and tutorials and documentation, they're really important for go-to-market. And so like I always want to see like, what have you written? How is it, right? Does it sit right? Does it create excitement? Does it strike the right tone? That sort of thing.
Yeah, and just showing, you know, being in this building for quite a while and being an entrepreneur space. I'm a book publisher. I grew up in a publishing house and had the benefit of being a part of meeting amazing people. The whole concept was we give all the rights and royalties to the author. So it brings in a lot of higher ticket clients, and knowing if you have a following, you can automatically make back into it. And we provide the power of the book marketing. But all that being said, it's really, really crazy when you realize the first hit. Like, you know, the first hit really is going to show you, like, how are you going to react? And so how do you handle failure? Because failure for you is literally money used and money gone.
Ooh, yes, it is. And I think part of this is also... Go ahead.
Just to clarify, failure is a strong word. We actually had a whole session about the word failure, but I guess
when things don't work out the way we want.
When things don't work out the way expected. Yes.
Yeah,
I wanted to clarify that before moving forward.
So I think part of that is like, I have a lot of conversations with people getting into venture. Like they want to raise their first fund, they're an emerging manager. And one of the first pieces of advice is I always give is like, you need to like stop talking to people and spend 3 weeks on portfolio construction and dig into the math behind it and the power law curve. And like, what do you think realistic expectations for the portfolio you're going to invest in are? Because mathematically speaking, 50% of them are going to zero. Obviously, I don't invest thinking, oh, this one's probably a zero, but like I'm not infallible, right? So when I level set with my investors, I'm like, hey, look, this is kind of the math behind what we're trying to build here. There will be failures. That being said, like they're crushing when they happen. Like you're watching someone's life's work just not go the way they thought, and they took a bet on themselves, and you know we took a bet on them, and that sort of thing. And like there's nothing happy about it, but I think it's also like you mentioned, failure is not the right word for that. Like this person took a risk that most people are unwilling or incapable of taking, and we need to honor that. So like I'm one of my superpowers is pep talks. So like I tell my founders, like, you need a pep talk, you call me, right? And that's like, even if things aren't going right, you're getting a pep talk.
What's the latest time you got a phone call for a pep talk? Latest or earliest, I guess.
There've been a few around midnight. You know, I have one founder who I don't know why, but he doesn't use the phone. He uses FaceTime. So I've had like multiple FaceTimes on my couch, you know, just up like this at midnight.
It's funny. We actually we had a conversation with the VC, and it was an introductory conversation, and the Google Meet was messing up, and the Zoom was messing up. And I called him on Instagram. He's like, I never thought about this. And he's just like, that's such a smart idea. I was like, look, I'm talking to you regardless, you know.
That's right.
You know, me right now, where we are as a group, we are getting to the school system, and we're trying to introduce the entrepreneurial mindset to students. That entrepreneurship is a mindset, not a job title. And the biggest thing that we really want to instill is intrinsic motivation and also the tolerance of risk and failure. So one thing I want to take away from this question as well, and for everybody here, what advice would you give to founders?
Actually, you and I were talking about before the session. The biggest advice I would have is start socializing your ideas and build reps talking about it, because confidence comes from reps, and you have enough reps, not everyone's going to love it. Like when I was raising my fund, like I realized very early on, like the product I am building is not for most people. But it was kind of like rejection therapy, right? You know, like I get out there and if somebody's like, yeah, it's not a fit. But then you find that one, right? And they're like, oh, I vibe with this. And like the dopamine hit you get from that is very real. And so like when I talk to people, I'm just like, here's what you got to do. You got to start talking about it, because you don't build confidence in a vacuum. And if you're just staring at your computer screen by yourself, you're not going to build confidence.
And other than, your moral compass, what is your opinion on when someone's presenting an idea to you, especially knowing that, they're not their goal, but ideally they can get, funding out of this. What is your balance between reality and what it can be? Like, what is too much for you and what is too little?
Ooh, hard to kind of do that in a vacuum. I think what I always want to see is understand the set of assumptions the founder is making about the world, right? Like there's this joke in venture that like some people try and predict the future and some people try to accurately describe the present. And I am much more of the mind that like our job is to accurately describe the present. And if you're a founder, like that's what I want to see you do.
That's not a funny joke.
Yeah, no, it's not a haha joke, right?
It's a real joke.
It's
yeah.
a real joke. But like, I get excited about founders who look at the world and say, this thing in the world is broken and I can't live in a world like that. It needs to be fixed. Okay, so that's step one. The next step is like, how do we fix it? And is that, going to be a valuable business? Because as much as I love talking to founders and wish I could invest in all of them, like I have a fiduciary obligation to my investors to maximize returns, right? So there is a balance there, and I don't know that I have a perfect answer for it. I think there's certain things that like most investors just have an allergic reaction to. So like I'll give you one of mine. Like in a prior investing role, we did a lot of deals where their main go-to-market strategy was through channel partners. And I just got burned by it so many times that I just have an allergic reaction. So if someone tells me like, hey, we're going to hit channel partners hard, I'm like, you're probably not wrong. It's not for me,
That's for sure. And, I think it's very, very important that when you are going, it's my opinion, and please give me your opinion, but I think it's very important to have your own assumptions, because you have to have a baseline. You have to know where you're going wrong, and no one wants to invest in someone that they have to start from, like they have to babysit. No. So it has to be, what is your assumptions? I agree with that. I don't agree with that. That was just, my own opinion on that. But right now, I'm open the floor up to questions here in a second before we close the session. But what is next for Abstraction Capital?
So my current fund is, ballpark 60-70% deployed. So I'm continuing to invest out of this fund, and then I will go back at some point and raise fund 2 for me. But this is the job I want to have until I retire. Like I built my dream thing. I love my job. I want to keep doing it, and hopefully the returns allow that to happen.
So it's funny, after saying all of that, I'm going to ask you one of Kevin's favorite questions. Well, what keeps you up at night then? What is it that's just, whether it's about this, whether it's pollution, whatever it may be, what is it that keeps you up?
I'll give you the one for my job. And it's basically like being a one-man band is fine with me. Like that doesn't bother me. I'm well suited to it. I'll probably be that way for a while. The risk with that is that the portfolio I build is a reflection of my own biases, and they're wrong, right? So like if I have this view of the world that like, this certain type of company and certain type of founder has like intrinsic value that other people are overlooking. Well, if I'm right, that's great. And if I'm wrong, my investors are not going to like me.
It's going to be very, very cool to see, when you're retirement, wherever that comes, to look back and see, how everything changed in the personal and the aspects of it. And the last thing I want to ask you before I open the floor to the other people is, when do you think I'm trying to word it correctly. I'm trying to ask is, when do you think venture capital and the field will begin to equal between being such a male dominant position?
Ooh, not soon enough. I mean, like, I have a lot of friends who are women GPs in the industry, and just listening to the horror stories there, like, is absurd. Really, VC has a horrifying lack of diversity almost any way you measure it. And I think there's been this much progress made in that. But I think part of it is most venture funds have to raise from LPs. LPs are preconditioned to look for pattern matching to what's been successful in the past. That's not right. It's not okay, but it's how they view their jobs. And so I think in my mind, like, you know, as an investor into startups, I am responsible for investing into diverse startups, and LPs are responsible for investing into diverse managers. And if no one's going to recognize that responsibility or they're unwilling to change it, then we're going to be here a while.
That's a great answer. Well, we definitely want to make sure you come back. The next Wednesday, we're having a year anniversary, so all of our speakers, please come in. We'll have most of them will be visiting. It'll be a great opportunity to, you know, just meet all the speakers and people that are focused on community building. But before I close, any final questions from the audience? Yeah.
So Taylor, there's a new founder from the UK moving to Kansas City, and she wants to know how to navigate venture capital in Kansas City. What's your best advice?
Navigate it in order to raise money for a company or to get into the industry?
First.
Okay. There are a few local funds that will absolutely answer to a cold email. And I think there need to be more. Like, I answer cold emails. I've done deals on cold emails. The sad reality is that most investors don't work that way. So what I would do as a founder is I would start showing up to local events, stuff like this, you know, anything where you can wrangle an invite, and then just do it one person at a time. Like, that's, if you're trying to get to people, you got to get out, you got to network, you got to have lunch, you got to have coffee, you got to have drinks. So I would play the long game. Like, that's not a happy answer, but I think it's probably the right answer.
Do you mind repeating the question in the microphone just for the recording?
If you were hiring, what roles would you be hiring for?
Yeah, great question. So in my particular, and this is a very specific to me and my firm answer, I am most likely, my next hire would probably be a part-time CFO or controller. Back to the unsexy part of my job, it's all the compliance and tax and stuff that I can do but don't love doing. So having someone that sat over my fund admin and bookkeeping group and just manage some of that and some of the investor relations, like, that would take a lot off my plate. Long term, like, I would absolutely like to hire junior staff members, an analyst or an associate, but I'm probably several years away from that.
So I apologize because I might have missed this earlier. What stage do you typically offer funds in? Like, what?
Yeah, I actually don't think we covered it. Good question. So okay. I say I do pre-seed and seed. There's a lot of ways you can dimension that. I tend to stick to round sizes that are under 3 or 3.5 million. If you're in the Bay Area, you can raise a $10 million seed round. I don't do that, right? So I stick to the smaller rounds. Part of that is my check size. When rounds get too large, my check size just doesn't make sense for the round construction.
Okay. And it was interesting that you made a statement about being self-aware about your biases. So in real time, when you feel or recognize that your bias is kicking in, what is your response mechanism to offset that so that you can actually see a vision more clearly, even if it doesn't necessarily align with what you think it's going to do?
Phenomenal question.
It's phenomenal.
So I think there's two things. Number one is time. So I'm a firm believer that, like, if I'm meeting with a company and I'm going to have multiple meetings, the trend line of my excitement should be going up every meeting. And if that ever falters, there's probably a reason for it that I need to dig into. And if I have more time to digest and think through things, I'm less likely to just kind of, like, you know, say yes for one of my biases. The other thing, back to the support of peer groups, like, if I am feeling a little bit like there's something tickling in the back of my brain here, I might be overlooking something, I'm going to call a trusted friend in the space whose opinion I respect and say, like, hey, pressure test my thinking here. Am I missing something? And I think, like, that sort of, you know, accountability with some sort of peer group is critical for founders, for investors, for human beings. Like, we all need that.
Yeah. Pressure test. That's a great question. You know, actually, a gentleman in the audience here, we made a lot of strides when we could define our problems and realizing that you're not going to trust someone with money without the understanding of your actual problems. So that's a really big one. But one thing I do want to ask you, knowing that we do have devs walking the door and people, how could Keystone assist you? And if so, how could we better help people that will be maybe one day in contact with you?
I am back to the one man band thing. I don't have perfect coverage. Like there's people I miss, there's deals I miss. So like my door is always open. You can find me easily. Like I love talking to people. It's the best part of my day. So send anyone my day.
And that's exactly it, especially for any viewers online. Where could they find you, whether it be social media or whatever the best avenue, LinkedIn, whatever it is for you?
I mean, I do LinkedIn because I have to, but I don't like it there. You can my email address is public. You can find me there. You can find me on Twitter. Slide into the DMs. Do whatever. Like I don't care. Yeah, I'm not hard to find.
Awesome. Well, we encourage you to hang out a little bit while we go in between sessions. You have time to meet with the community. But guys, thank you so much for joining us and viewing online. That's the end of session 1. Give it up for Taylor Clausen with Abstraction Capital. Thank you.